This is all.
CPRT Copart reporting 41 cents. That's a penny beat
Get some of this stuff
on the
off.
gap number sales.
What's up, everybody?
Revenue of 1.16 billion for CPRT. The estimate was 1.17
I'd like to
billion
see this
for Charlie
update in
Papa
time,
Romeo Tango.
but it's not updating yet.
MATW, Matthews International, reported 50 cents adjusted earnings. The estimate was 20 cents, so that's a beat for MATW. Sales of 318 million, the estimate 290 million, so that's a beat for Michael Alpha Tango Whiskey.
Senga! You got the wrong Senga. This is not
Viva
Luki.
Systems reporting
But I'm glad to hear your prop firm made a killing today.
$1.40. The estimate was $1.32 on the gap number, so that's a
He always thinks I'm Lucci. I don't know if he's pulling my leg. I don't. What's up, Pat?
11 million, the estimate 792 million.
AG, how are you? Give it another minute here and we'll get going. I don't need this, right? This is working. I could shut this off. Okay.
ESC ESCO Technologies reporting
Let me mute a couple things and we'll get going. Okay. Check and see if some of this stuff updates while I'm on here with you guys. Let's put this in here. Anything else that let me think. Hold on. Before I get wrapped up here. What was, there was something else I wanted to, oh, this thing. Oh, that's on there. I could find that. I'm talking to myself. Don't mind me. I'm trying to think of something there. If I think of it, I'll get it as I go. Thank you, Mr. Mario. Let me mute this guy. He's muted. All right, I think I'm good here.
Jay.
Yeah, there she is.
I figured I would take you up on your invitation
Yeah,
for a
yeah.
little bit.
It's a special
Hang
day
out.
today. We
Hang
got
out for a bit.
Pokemon Joe sharing the broadcast with us as well.
I'll
Everybody,
let you do your
be
thing.
nice. Say hello to Joe. Yeah. I'll run through some stuff and then we'll shoot the shit a little, you know?
Sure. Whatever you want to do, Jay. Your show.
You let me know. I'm sure people are curious to see kind of what we talked about today, what you saw today, you and Luch. A lot of the stuff we talked about on the recent stream, right, with the volatility and all, was interesting today, to say the least. So we'll definitely spend some time talking about that. Let me shut some of this stuff on the chart here. All right, everybody. Let's dive into it. Obviously, a really interesting day. I'll let Joe later, after I run through some of the stuff, share some thoughts on volatility and what he was seeing today, because this is kind of what we've been talking about recently, is that, you know, even with the index is pretty, you know, bullish, let's be honest. We're only a couple of percentage points going into today off the highs. You know, you have things like VIX and VVIX, some of the volatility indexes we look at, holding a bid. Even prior to that, before we got into earnings season, we talked about we would see often these divergences with VVIX. VVIX trading higher alongside equities for a period of time. We saw, a couple of times that surfaced. So volatility has been playing a big part here, especially on an intraday basis. And today you had a nice spike across the board. Let's see, I think I posted that chart here. Yep. So you can see some of the things we look at intraday here. This is the VIX. Many of you know that. This is VVIX here. For anybody who may not know, in simple terms, it's the volatility of volatility. All right. So I really like to look at that for divergences. A lot of clues, early clues on both a turn to the upside in equities, as there may still be some selling lingering, and what we've seen before this pullback, where you see VVIX, and we went through this. We've talked about this, where you see VVIX trade higher alongside equities for a couple of days, and usually that leads to some weakness in equities, right? So we've kind of been seeing that. This is one we haven't really talked about. This is TDEX measures tail risk, right? So it's kind of like VIX on steroids. You can kind of look at it. I'll let Joe talk about that later, because we were talking about it earlier today. You had a pretty big move, 2-day move in this TDEX. So people concerned about that left tail risk, right? That's what we're seeing there. And this here, and this I showed you guys, I like to look at VVIX inverted sometimes and overlay it with the S&P 500. And you can make out here, these are the divergences that we kind of were talking about prior, right? So you start to see on this indicator, the VVIX trade lower before equities, right? You see kind of a downtrend, lower highs, and then equities will catch up. So some really interesting things in the volatility complex. Let's talk about the market here, right? Because again, we've shared time. Everybody has an opinion. Everybody has a guess. And you see, turn on CNBC, people calling bottoms, people saying we're close to bottoms, people saying there is an AI bubble, there's no AI bubble, and nobody has a clue, right? I mean, some people end up being right. They got lucky, if you ask me. Not to say they don't know what they're talking about. We all know what we're talking about, but nobody can accurately predict these things, right? So for me, it's important to kind of get rid of that bias, right? Of course, I have a gut feeling on things, right? How I feel about things. But I learned early on that feeling does nothing but cost me money. God honest truth. And you guys may not be as bad as me off gut feelings, but I rather pay attention to the actual signals that I have confidence in over the years that I've been in this game that put me in the right position, where emotionally you can get really wrapped up in the noise. And on the flip side, you're getting a good look at it now. Stubborn bulls who are long, they see bullish, right? They feel bullish, and the market's telling them something different, and they don't want to hear it, right? So you'll see those type of guys on X telling you to keep buying until you lose all your money. That's basically what they do. So the bottom line is it's futile information. It's useless, okay? So that being said, what we were dealing with, going into this, and you guys know from even the last webinar that a lot of the stuff that we were concerned about, I feel a lot better about, even more so today than last week, right? Meaning that some of the things out there that were rubbing us the wrong way, getting us to feel uneasy about things, just sloppy, bullish behavior, right? In big parts of the market, they've been hit over the head pretty hard, okay? And I think the thing to keep in mind here, and it's important, is that when you get these crowded cases in pockets of the market, okay, it's very common that they overshoot to the downside. They overshoot to the upside, and they can overshoot to the downside, because what you have is you have an overcrowded area of the market, okay, that's been bullish for a long time, especially in these cases, and we're just starting to see cracks. I mean, realistically, if you talk about the AI part of the market, let's take that piece right now, right? I would say up until today, okay, and not to jump around, but I think the worst that could possibly happen was NVIDIA. There was a positive reaction coming out of the NVIDIA quarter, right? Because everybody and their mother was hoping for NVIDIA to bail out this market and that AI group, right? Everybody, okay? So you're not going to shake anybody out. You're not going to shake the tree, right? You're not going to get that overcrowded exposure to come loose by bailing it out every time, right? You need that to give. And so we went from, I think, the worst thing that could happen with NVIDIA knocking the cover off the ball and a positive reaction to the market to even being constructive now because of the reversal. And these reversals do a lot of damage on psyche and emotion, a lot. But the point I was making is that up until I think today, you're getting the first feel from people out there that, maybe there is an issue with some of these names, or maybe if there's not even an issue with some of these names, there's another issue weighing on these names, right? You're hearing Bitcoin's the reason, but the more important thing is that people are now concerned that maybe the stuff I own is not bulletproof anymore. Maybe I could actually lose money in stocks. I can't believe it, right? And we needed to get to that place. You need to get to that place, okay? So, again, I started even feeling more constructive about things last week, and a lot had to do with that speculative bubble that we were talking about popping, okay? And now you got that other crowded area of the market, the AI and large cap, mega cap, that people are feeling pain in as well. Let me show you two charts from Goldman that pretty much will tell you everything you need to know there, right? They're hysterical, actually, when you look at them. Here they are. Okay. This is both things, both pockets of the market that we were concerned about going into earnings season, okay? To the left here, you have Mag 7, and you have AI beneficiaries. And what you're seeing here is positioning in those two pockets of the market, right? And you can see we're ultimately, right, up, I think it was going into this week, we were pretty much at highs net exposure-wise in both these pockets, okay? We talked about there was a chase in even the semis, think of like Micron, Western Digital, SanDisk, this chase here, right? After being already a bit overextended, you had this chase into earnings as some of that spec bubble started to come undone, right? So they're feeling pain here now, right? They're feeling the pain of that. So again, what we're likely to see is some of these exposure levels come in. Now, again, we were talking about this in the steam room. We don't necessarily want it all to come unglued here. It doesn't have to work that way, right? Because what could happen is you could get outperformance from other spots of the market, and we'll talk about that a little more because I think it's important. But we talked about this. You can see other parts of the market outperform, and these sectors underperform, and you'll see some of this crowded positioning come loose just off that. Okay, but this is definitely a good start to, as we say, shake the tree. Okay, here on the right is that speculative bubble that we were talking about, right? You had basically zero revenue companies. Forget about non-profitable. They didn't even have revenue that went parabolic. Right? We talked about this. It pretty much looked like a blow-off top. If you wanted to draw up a blow-off top, that's how you would draw up a blow-off top, right? Very similar to spring of 2021. And what's interesting is that what played a big part in that blow-off top was not just speculative players buying and chasing, right? You had the professionals short a lot of this stuff sitting comfortably for years, probably since the 2022 bear market, that got squeezed hard. And that's what you see here. Okay, so this upper half is short selling, right? So you can see crowded shorts, and then they flip here, completely unwound their whole short exposure to all these names. Now, what you got now, again here, because of how much a lot of these things have come in already, they've been aggressively shorted again. Now, I know a lot of people are going to look at this and be like, oh, they're going parabolic again. It doesn't always work that way, right? What maybe this can help put in a low, right? In a lot of this area, very possible. But you have other things that are important to these type of speculative issues. One being liquidity, which we talked about, right? The liquidity backdrop is not the same it was over the past 3-4 months. Remember we discussed that? That was a big change even before these things rolled over, right? So they're going to need help from other areas, but at least you got them caught short again. And that was in a short amount of time, right? So if you do get a flip in liquidity, you probably get a healthy squeeze, and that's an understatement in a lot of this area. Okay, but this, right? And this is exactly what the big problem we felt was in markets. Okay, so now here's the issue we've been facing here, and I don't want to go too into the weeds, but the reason why you couldn't come to the conclusion and be ultra bearish just off this is because you have a whole other part of the market that's not involved in any of this, right? They look the complete opposite of this. Nobody has any interest in these things. They've been under-owned for a long time now. And, these areas are more macro-driven. They're economically sensitive, right? So they rely on the Fed and interest rates, okay? So going into earnings season and the troubles we were facing, you don't really know how much of an impact it's going to have on the actual indexes, because they can very easily come out of the crowded stuff and rotate into the stuff that's under-owned, especially if the macro backdrop is improving because the Fed is cutting rates. Okay? Now, today, you get a stronger than expected job number. The market's been pricing out a big chunk of the December rate cut. I think it's a little under 50-50 now, right? So what's happened is that spot where they may rotate into has been pushed aside. And that's why I think, you're seeing a weaker overall market in a sense, right? Now, don't get me wrong. You got these mega cap names and these Mag 7 names, NVIDIA, they make a big dent on the indexes. They move the indexes. So if they're being sold, the indexes are going lower, right? But if they stabilize and you get some rotation into these other areas of the market, you could get a market that grinds higher even without some of these over-owned areas. And, that's some of the stuff we were talking about going into earnings season, right? And to me, I feel that's still an important piece, right? Because even though these crowded areas have been sold, and they're not as complacent anymore in these things, there's some technical damage out there, right? it's not a likely scenario where these things do a V-shaped recovery and rip to new highs. Possible? Yeah, certainly, especially if you get the Fed implementing some sort of QE, non-QE type crap, right? So anything's possible. But without that, right, without the liquidity backdrop improving, it likely is going to take time, right? Because there's some technical damage there. You got sellers now. You got players that may want to sell into rallies because they own too much of this stuff. Okay, so that being said, I still think that other part of the market where I'm kind of focused on right now, where nobody's in, needs to be involved and almost needs to take a leadership role for this market to start looking constructive again. Okay, we haven't seen any signs of that yet. None. Zippo, zero. Right? Sweeper activity has been extremely selective. Some of the stuff we've seen buying in, the more aggressive buying in, has been defensive. So they're rotating it to defensive stuff like we talked about. Eli Lilly, Merck. Okay, well, that may be good for those select names. For the market, that's not showing any aggressive risk-on appetite, right? That's defensive posture. Okay, so the Fed obviously is an important piece here, right? Regardless of what they do, but that's still what I'm looking for here is that still to take fold. In other words, that under-owned part of the market to start to get attention, start to see some accumulation, and take a leadership role. Okay, if that doesn't happen, that doesn't necessarily mean the market has to fall apart, right? We're already on a short-term time basis. We're pretty washed out. Like if you look, let's look at some short-term stuff here quickly. Okay, this is one of the short-term measures I like to look at. You can see under 10 is a pretty good place to look for snapback rallies, as we like to say, right? And usually when the rally shows up, it's a pretty decent one. Again, we did see one this morning before it evaporated. I think we were up 120 handles on ES, right? But the longer this lingers down here, it should get squeezy out there, barring some sort of, I'm not even going to say calamity, but a problem, okay, where the Fed has to react, okay? Then you can overshoot, but in all likelihood, if the Fed does enough, the rally that follows is going to be a meaningful one, right? Okay, so we're already pretty washed out here. One thing I wanted to see that we really didn't get there yet, again, I'm just looking at a washout low now. This is without any sweeper confirmation, okay? Is this I like to look at. And this is basically a board of internals and breadth, right? And very simply put, green means washed out, oversold, and red is overheated, right? So up near the highs, you usually see this whole thing lit up red, and as a market gets hit over the head and everything is correlated, you get all green. This was going into today, and you can see again, on a shorter term basis, right? Some of these shorter term measures, you're pretty washed out, okay? But if you go out in time frame, intermediate, longer term time frame, you're not quite there yet. Now, maybe after today, there was enough selling to see more green on here, but usually when you find at least a tradable low, looking for a washed out low, you see enough green on here that puts in a floor, okay? In other words, even if we don't rally to new highs and it's not the start of a new bull leg, okay, it puts in a floor because, again, it's significantly oversold. It's a solid tradable low to play off of, all right? So again, this was going into today, wasn't quite there yet. Maybe we should see some improvement at the least. One of the groups that is already there, interestingly enough, is the real estate part of the market. Now, that has everything to do with Fed and interest rates, right? Because since this rate cut for December's been getting priced out. I mean, you look like you didn't even need the Fed to sound hawkish. You look at the price action in home builders, and it's been telling us that they don't think a rate cut's coming, right? Anything that's interest rate sensitive hasn't been acting well at all. Okay. So again, if the Fed gets involved, this is one of the groups I'm definitely interested in. Again, it's not the sexiest group out there, but you catch a new bull cycle in home builders with the Fed as a tailwind at your back, and these things can move. I'll give you an example. We were looking at it today earlier in the room. You go back, they let us out, interestingly enough, of the 2022 bear market. They let us out. Okay. And you can see here. So while most stocks, even Mag 7, wasn't even rallying, Amazon, I remember, continued to make new lows. Home builders were breaking out. Okay. And at the same time, what was the Fed doing? The Fed wasn't even easing or anything yet. They were still in a tightening cycle, but the home builders were telling you it's over. That tightening cycle's done. At least the market is pricing in that it's done. Right? So these are some of the clues that we want to look for when you get a nice rinse like we have so far. Again, let's be honest. Percentage-wise off the highs, this is not even a legit correction yet. But I'm being honest with you. I didn't even feel good about something like this showing up, because if they rotated into these other parts of the market, it would have held up the indexes. It would have held up the indexes. So again, you guys know we've been talking about that a lot here. Okay. So that's short term. Let me show you something else before I get into the weeds on some of the other stuff. Credit markets, right? And here's the thing. We're looking at everything that's in front of us, right? Trying to handicap things. Okay. And again, we could feel the market's washed out. We could think it's oversold. RSI is low. Okay. Especially if sweepers aren't buying, there could be something else going on. Right? Liquidity, credit that we're not seeing right in front of us. And that's why it's important to pay attention to these other things we talk about on this webinar and in the steam room every day, right? This is a proxy for credit spreads. You guys know I talk about that a lot on this webinar, right? And if you remember, what we were talking about was this diversion that started to take place while equities were still strong and making new highs, right? You had the equity market making new highs, hanging around highs, and you had a pretty obvious divergence here in credit spreads. So again, the credit market wasn't confirming the strength in equities. And what I mentioned to you guys, if you remember, a lot of people, especially these guys who pound their chests on social media, they come out with these sayings, only price pays and all this bullshit. That's where it can get you in trouble. Because the equity market and the equities was still strong as hell, but credit wasn't confirming that strength, right? The longer that went on, wasn't going to make us feel better about things. It would make us feel worse about things. Because then, right, if you got a lengthy period of a divergence there, it can lead to an even more aggressive sell when the time comes, right? So the logic is the credit market sniffing out a potential issue. And you can see where it's gone to here. Now, the good news is it's not leading to the downside over the past couple of days. Okay, it's been a lot more quiet than it's been prior to this week. Okay, that's good because like we saw a couple of weeks ago, you don't want to see credit spreads lead to the downside, right? If credit spreads are going to trade alongside equities, that's fine. The market could go lower, but at least credit's not sniffing out a larger issue. Right? So what we're looking for here is some signs of a bullish divergence. So maybe equities are still under pressure. People are starting to worry about AI. Maybe it really is a bubble. Maybe I really am going to lose money. But you start to see credit catch a bid and spreads tighten up. All right. And that's usually an early indication that even though equities are still selling, we're closer to that bottom. All right. So these things now, all these things we talk about become even more important now, not as a warning signal, but now as a turning point, right? A signal for a turning point is what we're keeping our eyes on. Okay. And again, we're not quite there yet on any of this stuff, but equities have adjusted. Right. And that was the first thing that needs to happen before we could start looking for a divergence in the other direction. Correlation, again, I probably annoyed the living daylights out of you guys with this, right? I know most of you, especially you newer guys, were saying, what the hell is he wasting his time with correlation, with equities going up every day? But again, you were at a spot where at the least you were going to get some sort of pop in VIX and some sort of rinse that almost everything comes down with it, right? And we didn't get that initially, but now look where correlation, some of these correlation indicators are now. This is the shorter term one, 1 month, right? But you can see the difference where we're at now. And why am I feeling better about things now than I was there? Here, okay, I had no wiggle room here. I start legging into longs here. It's only a matter of time before something like this happens and hits me over the head, right? But as this starts to rise now, and eventually tops, that's the runway for a nice broad snapback rally, right? And the worse it gets, the better, because then when it finally tops out and you start to see divergence there, that'll put in a nice floor. Even if the equity market's not ripping back, you have a nice floor to play off. Okay, but now we got a lot of wiggle room here. Right? You got a lot more wiggle room here than you had down there. So that's what's got me feeling a lot better about things. And put the call, right? I showed you the charts of mostly retail, but speculation in a lot of these cheaper names, especially on the call side. Right? We broke 2021 highs on a lot of these option speculation indicators we were looking at. Okay. Again, you had a low put to call ratio, one of the more broad things to look at. And as you can see over the past few days here, you got a nice lift in most put to call ratios. All right. This was the April low. All right. We got up to about here. You go back here, August, we got a little bit higher, but you can see you don't need to be at a certain point to make a low. Like we're there already where I think we got to keep our eyes open for these turning point signals, right? But again, this has me feeling a lot better about things than where we were, where everybody's long and can only get caught, right? So a lot of these things that we look at here, this is not the best liquidity indicator right now. There's others on social media. I talk about Howell, who I follow, who's got some cool looking liquidity indicators. This is global liquidity and forward looking that I've shown you guys. And the most important takeaway from this, okay, not to get into the weeds, is that it's topped out and leaking. Okay, not that it's crashing, all right, but in simple English, liquidity is not, the liquidity backdrop is not as abundant as it was a month ago, or 2 months ago, or 3 months ago, right? You had as bullish as a signal as you would have out of any of these liquidity indicators coming out of the April lows, right? And now where it may not be a catastrophe, the speculative appetite obviously is going to decrease off what you're seeing in liquidity right now. And it has across the board, right? What's spoken me a little bit is now everybody's talking about Bitcoin as this kind of leading indicator, where I feel like it has been, right? We've been talking about that. Now you're starting to hear it on CNBC, and usually it loses its luster once you start hearing that. But you know, Bitcoin's been telling us that, right? Bitcoin's been telling us that. Now I know people have, especially the crypto bros out there, have different excuses. No, whales are flipping wallets and flipping this and flipping that, whatever. Right? You had risk-on behavior, big spec appetite in equities, right? It should have been in Bitcoin, and it wasn't. Right? And now you see where we are here. And obviously it's weighing on even the speculative assets and equities. They trade off the same shit. Right? It may not have the same effect on the overall indexes. It may not have the same effect on larger cap defensive names. Okay. But the names that we all like to play, the names that we all made a lot of money in over the last 4 months, 5 months, you better know for damn shit sure that liquidity plays a big part in that. All right? I mean, zero revenue stocks with just the story. Without liquidity there, nobody wants it. Nobody wants it. All right? And then when liquidity is there, all of a sudden, people will buy anything with a ticker. All right? So these things are important to keep tabs on. Otherwise, I mean, if you don't have the interest, you're going to get lumped on over the head and wonder why your stock that still has a sexy story or is still making money is getting lumped up. Okay, but again, I know like everybody wants the buy or sell or all in bull, all in bear signal all the time. All right, and you guys should know that about me. I know some of you don't like it, but I don't short. My short position is cash. Okay. And again, I'm not a great trader. I don't even consider myself a good trader. I told you guys. The one thing that I'll pat myself on the back that I can do well is when the signals are telling me to put the gun back in the holster, I'll go into cash and sit as long as I need to sit until the signals tell me to take out the guns and start firing again. That simple. And one thing I know, just based off how long I've been in the game, is that even if those signals aren't firing and nailing the exact lows, they will be there early enough to participate in the upside. Right? You think about the April lows. You didn't have to buy the April bottom to make money. You could have came in literally in July and killed it from that point. Right? So to me, that's the benefit of sitting in cash and being patient. You understand? Of course, I want to trade something. Of course, I want to root something on. I'm just as big as a degenerate as any of you. All right? But when you're in this game long enough, you're going to learn that, listen, do you want to entertain yourself and lose money? Or do you want to be smart about things, hang on to your money, and be ready to shoot when the time's right? All right? And ultimately, that's what it comes down to. So that being said, again, I think we're closer to that point than obviously we were a week ago, 2 weeks ago, for shit short 3 weeks ago. All right? But we got to let the market do the talking and we do the listening. Plain and simple. Right? When we start to see some of these early signs, these early signals, and we start to see sweepers show some interest again, they're showing no interest, guys. Now, listen, this is a tough week this week. This was an awful week. Let's be honest. Okay. You had economic data with the job number where after the government was closed for God knows how long. Right? You had NVIDIA where everybody and their mother owns the stock. everybody and their mother owns stocks tied to NVIDIA. I think it was something like 800 ETFs have a core position in NVIDIA, right? And then you got OPEX. You couldn't draw up a noisier week for flow, right? So it doesn't even bother me as much as it would in a normal week that we're not seeing any signs of aggressive buying. I'd rather that be the case. Let them show up next week in a cleaner week, right? Or the week after. So we can have that conviction when we see it. All right. But the point I'm making is that, the sweeper activity is, there's just very little risk appetite in the type of action that we look for. And you guys know in the steam room, there's really not a lot of stuff. I mean, the stuff I'm putting basically on a top bet list is majority leaps. 2028 leaps. Very little. Again, there were a few names: Lilly, Merck, Meta had some Jan call buying. All right. Just again, for the type of action I'm waiting for, it just hasn't been there yet. All right. So fire your questions. Joe.
You're so humble, Jay. You know that?
What? Why?
You're so humble.
Because I invited you on?
No, you're humble because you're like, I don't even consider myself a good trader.
Oh, humble. No, but I'm being honest, though. I told these guys, if you put a gun to my head and told me, listen, you got to trade this market today, both sides, I'd probably get destroyed. I'm being honest with you. I'll get destroyed. And I'm not even going out on a limb saying that. It's because early on I knew, like, emotionally, I'm just not wired the right way to be successful in this market. You know what I mean? That's the problem. I'm not wired the right way. So, I need things to cue me in, otherwise I'd be a shit show. I really would. We talked about it earlier today, if you remember, Joe, that, just to have a bias and then flip to the other side and try to make money on the other end is probably the most difficult thing I think anybody can do in the market. Right? We talked about it today. Like, you're long, and then let's say you got to stop yourself out, and now you got to get short. That's not an easy thing to do. Especially, I'm talking more even on a swing trade basis. It's even that much more difficult. You mentioned like Lucci, who salivates off this environment.
Well,
right? And he got caught a little long, and it wasn't even that he got caught long that he's pissed off about. He's pissed off that he missed out on the downside.
He
right?
missed the short, and
yeah,
he
that's
just
what
flipped.
he's pissed off about.
He just flipped, so he started a swing short, position now, with what he saw today, and he thinks that this is, for the lack of a better term, things are going towards bear market. But you remember how he is? He's a field trader, right?
Yeah, exactly.
He's seeing things a certain way. I mean, Jay, if you don't mind, what I wanted to kind of bring up, and we talked about this a little bit, was I like to, for those that don't know who I am, I'm Joe. I'm part of the Steam Room crew, but I focus more on the index side. And I like to marry what I do intraday with what Jay's talking about, right? Like for these longer term things. But the one thing, Jay, that you and I were talking about that I don't think people fully understood about what was happening today, because a lot of people got their face ripped off, was what was actually happening underneath the hood, right? I can't tell you what the catalyst was.
You want to take the screen?
No, there's like really nothing for me to show. It's
right.
It's just an explanation per se of what happened on SPX and ES.
Yeah.
But I can't give anybody what was the catalyst, because the funniest part is, if you read McElligot's note this morning, and I know Jay, you did too, he was like, okay, we can all calm down. Fall sellers we're good. They sold it off. Nvidia's gone up. Like, it's relief now. And then 2 hours later, he hits a note to a couple people in a Bloomberg terminal that they sent it to me, and he goes, we have no idea what happened. We don't know what the catalyst is. And obviously, we flip from being up 2% to down 2%, which is nuts. Like, that's significant. But when you look under the hood of what is going on, and we've talked about this whole pressure cooker idea, but I think a lot of people are going to get really scared off of this. Like, emotions get very high when this shit happens. You know this, Jay.
Oh, yeah.
But at the end of the day, one thing to understand is, from a dealer's perspective, right? We're in a negative gamma regime. So what that means, for those that don't know what gamma is just dealers are going to sell with price versus if positive they buy with price. So you had that, right? Then on top of it, we're in a high Vanna environment. So high Vanna would mean as volatility spikes, delta increases, dealer have to hedge. So now you have high Vanna, negative gamma. Then you have all these VIX ETFs, right? Or ETPs, whatever you want to call them, that have Vega. All of these pieces fueled the sell-off. Now there has to be a catalyst. I can't tell you what that is, but when you get to the point where you have these levered ETFs now that have to rebalance constantly, and there's so much more on the downside. You talk about how when vol spikes, delta increases on their book, they have to sell futures, and then you add in the fact that VIX is in negative gamma and SPX is in negative gamma. All it is fuel. There is
it feeds off itself, basically.
That's
they
it.
all feed off each other.
Exactly. It's just a vicious cycle that pushes these kind of movements. Now, for as much as you can move down, you can move up in the same capacity. And I think that's what a lot of people kind of miss with this, right? They look at this, they're going to see how big of a flip it is. And now I can't tell you how many people I've talked to are like, oh my God, it's bear market. It's this, right?
Yeah.
That's why I like to take that information that I know of what fueled all of this to make this be exaggerated and marry it to what you say. Like, okay, well, let's see what this happens. Let's see what this does. Right. Because at the end of the day, we could wake up tomorrow, right, and trade, and this could have been a blip on the vol radar. You don't know.
No. And that's the thing. Like nobody knows, positioning gets caught, but nobody really knows the reasons. I mean, I don't know. I heard, Bitcoin related, this related, CDS related, a bunch of things. I didn't hear. I don't think anybody knows the exact reason.
No.
Did you hear anything?
I got nothing. Even from the people that are like well connected in the Bloomberg terminal world and like talk to McElligott and all these people, I got nothing. Yeah. No one knows what put the scare on the vol products, and then they just went bid. And then think about this: as this is happening, what do you think other people are doing to hedge some of this shit intraday?
Yeah,
just fucking buying the crap out of 0DT,
adding more flame. Yep, adding more.
And what does that do? Right now, all of that makes the dealer. If we're long that gamma, they're short that gamma. That just adds fuel to the fire.
Yep.
Just all of that today did that. So there's just so many dynamics that play from an intraday basis, and this caught everybody off sides, and it is what it is, right? How this, if it's like you talked about, like tomorrow or next week or whatever, when we get more stuff, like sure, this could easily reverse and everyone's wrong. I mean, for what it's worth, there was some fat, ES call spread buyers, right, that are seeing this bloodbath, seeing everybody get all bared up and saying, well, fuck you, I'm going to be a contrarian. I'm going to go buy some lotto call swings, right? Like that's their game.
Yeah. And then that's the thing. Like the time frame is important because, if you're doing what Joe and Lucci are doing and you're looking for scalps intraday, you're focused on that and you're not trying to get wrapped up in what may transpire 2 months from now. Right. And if you're a swing trader, you can't, if you're a position trader, what happens each and every day. And that's where, again, the signals, I think the big picture signals are important because if you're not seeing anything there, the price action in one day with everything Joe just rambled off having an effect and feeding off each other, it's meaningless. Like it could be anything, right? Exactly. The dominoes are set in motion and that's it. So that's why I think it's important, right? The sweeper activity to me is kind of the timing mechanism, right? So that's, in other words, the smarter money than us kind of putting money to risk, right? And the signals behind that usually come even before the sweeper activity, right? They're usually queuing off that and starting to put money. So until we see that, I honestly, to Joe's point, I don't know what could happen. We can go up tomorrow, make it all back, and give it back the next week. God only knows. I got this chart up. Did you see this? This is hysterical. This is Oracle's credit default swaps and the regular IG credit default swaps. All right. Boy. So of all the corporate stocks, the light blue, right, is in other words, the IG credit spreads we look at, LQD, IEF, that's this here basically. Okay, the light blue. Look at Oracle's. All right. So who knows? I don't know what's going on here. What the hell's going on here? Is Oracle going bust? What the?
Yeah, so they're betting on it going bust.
What So So, like, these are the things, especially some of the newer traders aren't really paying much attention to. They're looking at their stock. Oh, my stock is profitable. They're going to do this. But, that doesn't mean if something bigger is at play, the market can't take it down lower than where it is. You got other forces out there. So the more important thing is, if you don't have to, outside of scalping intraday, if you can avoid getting in the middle of this mess, you avoid doing that on an overnight basis because it's so random. Anything can happen. And then when the dust settles, shit clears up, you start to hear a different story out of the market, and that's what you want to pay attention to.
Yeah, it's a good point because, and then that's the whole emotional aspect of this too. And people see shit like this, right? They don't understand. Remember all the stuff I rambled off of what was actually going on, right? Like it's just feel the fight. It doesn't necessarily mean, and this is the easiest way to put it. It's more complex, but let's just say that they said, "Oh, the market should go down 0.5%." Well, when you have all that fuel, maybe it goes down 1.5, maybe it goes down 2, right? And the same thing happens on the upside for all of this stuff. It all is reversed on the other end.
It always overshoots to the upside. Always.
Exactly. So it's one of those things too, where there's just enough fuel until the buying shows up, or with your indicators that you look at. I mean, I got asked today, what are you swinging? And I said, I'm completely flat on my swings. I have nothing.
Yeah. If you're not running a book, and this is why sometimes it amazes me. If you're not running a book, if you're not running client money, okay, if you're unsure about things, right? And obviously right now is a perfect example of that, okay? Why would you do you have to own something? That's what I don't understand from a lot of people. They have to be involved, even if the odds are against them. They have to be involved for what? Action purposes. Now again, some people run client money and clients don't, I know from experience, they don't like to be in cash. You see how I come on this webinar and I'm like, oh, we got to be patient. We're not there yet. It's getting better. There's only so much of that you could tell a client before they ACAT the account out and send it to some other bozo who's a better salesman than you are, So that's a whole different ballgame. But if you're running your own book, you're running your own money, I mean, you have that luxury. You shouldn't care what anybody has to say about what you're doing, And the ability to sidestep these periods in the market are so important as a trader. Not as an investor, but as a trader. This is another big topic, Joe, that people are talking about, the systematic selling that's involved. Again, this portion of the market we talked about, they are sellers. They've been selling. The big level is right around here, 64.40, give or take. Okay, so different models have different levels. They're all in this vicinity. That's that intermediate or medium turn threshold that basically gets CTAs flipping short. Okay, so if you remember, the CTA, these systematic funds were all in long. All right, they caught a nice chunk of this trend. Okay, they've been taking down that long exposure now the last couple of weeks. Okay, so they've been selling in this market, right? Not super aggressively, but they're net sellers. Okay, as a market weakens from this point, that's when they get a little more aggressive. Okay, and when you start cracking certain levels, again, it's very systematic, right? You start cracking certain levels to the downside on the S&P, you start cracking levels to the upside on volatility, and that will accelerate the selling, and you can get more of kind of a more violent waterfall type sell. Okay, listen, the way I look at it, and especially if you're in an elevated cash position now, if you have that luxury, or a cash position in general, that's not the end of the world, because it's going to add to the weakness. It's going to make it even more spooky out there. You're going to hear people talking about 1929 crash and all that shit. All right. But eventually the end point is you get systematic funds now net short, God forbid, all in short. And you're at a point, just watch the webinars in April when we were talking about that even if there's more bad news, it's going to be difficult for the market to go lower because everybody's already short. You understand? So while short term, people, it can make it look a little more scary, bigger picture wise, it's not the worst thing in the world to get these funds on the short side. Because then when they got to turn, right? When the price action turns and the market starts to rally and we start cracking levels to the upside and VIX starts cracking levels to the downside, you get the opposite effect. Exactly what happened with the liberation lows in April for most of the rally, right? So again, to me, and it's a lot easier, you feel a lot better about things when you're in cash, obviously, but this is good, right? These things, you let them shake out, and then eventually these are the sweet spot entries that you can get a little aggressive and make big money off of with a lot less risk. Where we were in a market that just kept grinding higher, everybody chasing the market. We got to a point where the market would go up. 3 out of 4 stocks weren't even going up with the market. It was disgusting. Disgusting. You don't want that to linger. You don't want that to continue. That's impossible. That's the worst trading environment. So no matter what, when the dust settles here, when this is finally done, you're going to have a nice setup. You're going to have a real nice setup. And again, don't let anybody spook you. Even if it's the start of a bear market, okay, you're going, at worst case scenario, you get a violent and strong bear market rally that you can take advantage of. Even if we're in worst case scenario, a bear market, once this shakes out. But again, I don't think we're at that point, but I could be dead wrong. But you know what I mean? As a bull, you want to keep your eyes open starting now. We got any questions out there? I like to ramble and people ask questions.
I think there was one here, Jay, for you. If short-term comp and tactical continue to be false signals, can we assume there's something larger at play?
That's a great question. Yes, and it's not necessarily something larger at play, but a lot of times they'll tell you that you're in a legit correction, right? So when those short-term signals fail, is when you get into a correction. Now, even in corrections, a lot of times what will happen, what's more likely to happen is, let's pull up a chart of ES and I'll show you what I mean. Okay. Even if you're in a correction, right? Let's take April, for example. Here, the short-term signals were all bullish. Okay. The short-term sentiment comp you're referring to, which is at 5, was at 0, I think, for a couple days. And I think the market had a day or two lower even after that. All right. So let's say even here is basically where you started to see those green bullish sentiment signals on a short-term time horizon. What happens often is this. Okay. You finally get a bottom, but the relief rally doesn't have much gusto. And that's usually a telltale sign, that you're in something different, right? So in other words, what I'm getting at is the short-term signals can overshoot for a couple of days. That's common. You know what I mean? It's the bounce back that has a lot more information in it, right? And again, if you're in the room, the sweeper activity into that bounce back is going to have a lot of information, right? We see that often. Back in April, we saw it, March, whenever that was, when there's no buying, all right, when there's no risk appetite coming into that bounce back, that's screaming that we still have work to do. So again, those short-term signals, the way you want to play them generally, and let's say now even, right? If you've been playing those short-term signals all year and you've been knocking the cover off the ball because they've all been winners throughout this rally, it's worth playing here. In other words, I wouldn't get cute with names because it's a little dangerous with all these different pockets out there. But if you want to play, make a bet here on an S&P snapback rally, that's not the worst idea in the world. But it's a trade. I wouldn't go nuts. It's a trade. You played it all year. If this one fails, if you manage your money properly, it's just a loser. You understand? So it's worth that if that's what you're looking for. But I wouldn't put it in the category of failure yet. We're not there yet. You know, like this is just we're lingering here right now. Now, if this just falls apart here, then we don't even need that signal to tell us there's something bigger at play. There's something bigger at play. You know, if this market falls apart here. But we'll likely see it in credit and all that shit. What else? Anybody else have any questions about any of this stuff? Anything you're unsure of, or anything we didn't look at that we usually look at? Oh, tomorrow I think we get Sharpie positioning. Can you believe it?
How long has it been since you got it?
What?
How long has it been since you got it last?
From the government shutdown.
Right. It's been like what, 2 months, give or take?
Feels like 3 years.
That's going to be interesting to see.
And now we got some equity. We got a little equity market weakness. Perfect timing. So, right. So these are things we want to pay attention to. Sharpies, putting on exposure into the weakness. I don't know, maybe the opposite. Maybe we get tomorrow's update and they've been aggressively shorting for all we know. But this is the information that you want to pay attention to more than the noise that's out there, because the noise is useless.
I got a question for you, Jay.
What?
I got a question for you.
Oh, yeah. Shoot.
Okay, so obviously you've been doing this much longer than I have, right? And we trade differently, right? I do a lot more of the intraday crap, and then you like the underbelly names. And even though, thanks to you, I do a lot more of the underbelly trading now.
You killed it in the underbelly. Who you killed?
I did. BE and MBIS were monsters.
BE and BIS. Those two alone, that's all you need.
Silver, uranium, yeah, those were nice. But you've seen a lot of these flip-flops, right, in the market. I just got to ask this from an intraday perspective. How often have you actually seen a 2% move, like on a gap, to be a 2% move to the other side, and we whipsaw 4% without it being like, and I'm not talking about black swan events. I'm not talking about COVID. I'm not talking about that. I'm talking about how often do you see something like this?
Again, percentage-wise, maybe not to this magnitude, but it's funny you mentioned that, because I heard Bespoke, I think it was Bespoke on CNBC. The prior times we had a trading day like this. One was before it led to the 2008 downfall. That was the one, the bad one. The others were actually ended up being bullish. So in other words, what you were alluding to earlier, because emotionally, psychologically, they do so much damage and get people bared up that eventually, a month out, if you look, they ended up being a bullish signal more than anything else. But you usually see these type of days in bear markets more so than just regular pullbacks. Like a lot of times, again, 2008, it felt like literally every day the market would gap up. People would think, all right, maybe it's over, bottom, and then now we're into the day, crash. Literally, that was the whole latter part of that 2008 market. I wonder if you could even see it on a chart here. But yeah, it's interesting you bring that up, because we haven't seen a whole lot of that recently, right? You got to understand this market that we've been in, especially like the price action since April. It's not your usual market action. You normally get shakeouts and corrections, not just straight up like we had. It's unusual. The strength we've seen since April has been really unusual. Unusual.
Check the STEAMROOM chat. I just sent you the image I think you're talking about.
How do I check the STEAMROOM chat? I gotta find
go to your top. You have just the regular room. You have it on the top on your second tab.
Top on the second tab?
You know where you have market updates?
Yeah.
Yeah, it's over there.
No, it's not.
Oh yeah, I'll put it in market updates for you.
Hold on. Yeah, put it in market updates. I can't find it. I think I gotta go to your name or something, don't I?
No, you're good. I'll put it in market updates for you. There you go.
That's easier for me. Now what did I do? Here's one. Market updates. Oh, there it is. I see it now. Oh yeah. So what's this guy saying here? This is. Oh yeah. This is the one, right? Let me see.
Yeah, it's the one I think you were mentioning. I just didn't.
Oh yeah. Okay. Hold on. S&P 500 gap up more than 1%, then close negative. So here are all the occasions. Where's the 2008 though? It's not showing the 2008 Bespoke was talking. Maybe he was talking about something a little different. But interesting. This came in the middle of it. This one was early here. So kind of erratic, right?
Yeah, I think
But
it kind of
mostly
plays
bullish
onto you.
further out, it looks like.
Yeah, I think it kind of plays into what you've been saying. Where I mean, I've seen Chris Cady mention this all the time. Where people, he's like, these guys have been doing this for a while that just can't. They can't trade in this shit anymore,
No.
right? For whatever it's just too, it's too chaotic.
Yeah.
And again, I'm used to the chaos because I didn't do this in the '90s and whatnot. You know what I mean? Like I was a child, right? So I didn't see that, or even the '08 stuff. I wasn't trading around then. I was in high school, so for me, I guess the last handful of years I'm used to volatility, but I also did trade the last Trump market, but the last Trump market wasn't like this. Like this is this is a lot more chaos.
I wonder if this is this is not. You're talking about same day. That's same day. That's a
Right. This is the same
move.
day stuff that I'm talking about. Now, again, to what I was talking about earlier, there's so much more under the hood now with all these levered ETFs and VIX products and the rise in zero DTEs that add fuel to all of this, which makes it so much more erratic. But I was just curious, like, okay, well, how often does this actually happen?
Yeah, I mean, the market's so much quicker now. That's what it is too. And mostly the velocity. That's what drives you nuts. Makes it feel a lot worse than it actually is in the grand scheme of things. But that, Joe, what we talk about all the time, that we're going to pay the price for all this leverage, all this stuff, right?
Guaranteed.
I mean, eventually you're going to see the effects on the downside. That's the inevitable. It's just a matter of time.
It'll be catastrophic if you ask me. I think it'll be one of the
how
worst
can it not
things
be? I don't understand how
you'll ever see.
And that's what people don't understand. Like nobody complains about it to the upside. If you don't think that played a big part in the upside, you're nuts. All those rips, all that leverage played a huge part in it. At the end, it plays a part to the downside, and that's where you get shit like 2008 or 2000. The unwind of that. But
right,
it's
the primary.
Come to it.
It's the primary reason I started studying this shit. In all honesty, right? I've spent
it's a big part. It's a huge
because it's become so prevalent in the market, especially with all 0-day stuff. I'm like, I have to learn this. I don't have a choice.
Listen, you love it and you're staring at it all day.
Yeah.
I mean, even if it's not your thing, you have to acknowledge it. You have to be aware of it. So because it's so important. Even big picture wise, even if you're not trading intraday, it has a huge effect on things.
Yeah, like structurally. So like when you were talking about the CTAs, right, and their level, if you look at the current structure on some of the SPX stuff, and again, we have OPEX and rolling, you've run into a lot of structural problems if we get to that level, just in general. Right. So that's when things can get a little bit more ugly from a broader picture perspective.
Yep. So again, they're definitely important. But again, we'll see what the hell is behind this. If this is just crowded positioning playing a part, which it certainly could be. Again, this market, feels a lot worse than it is. I am lost. What is important? What Joe's talking about, what Joe likes to look at all day long from gamma and the market structure, positioning, and stuff like that. We're talking about plays a big part.
Yeah, Mario,
that's what I was going to say. We don't even realize, how everybody plays options. People don't even own the stock anymore, especially more on the retail side. Everyone's playing options, So a lot of the retail crowd got lumped up already, right? Any calls you're in, and they're not in calls with time. They're short dated calls. They got lumped up already. So the retail aspect of this is not even a concern anymore, in my opinion.
No. And I don't think that many of them actually understand volatility's role in the options, right?
Oh,
Like
yeah, what
there's
do you mean
scenarios
understand?
here
They
where
got
you could be.
Robinhood started off where you
Yeah.
either hit buy or sell. That's all the information you
Well,
had.
did you see what you could do with Robinhood now on mobile? They're letting
What,
people
you
short
can
sell
hedge it
stuff.
with the Knicks -2 today? What?
No, well, you can with prediction markets.
You
but
I got it.
they-
SPY parlay with the Knicks tonight -2. Can you do that
Jay,
yet?
you laugh. That's probably going to happen at some
You
point.
know that's gonna happen.
Yeah, but you can short sell stock now, just straight up on Robinhood via mobile. They never let people used to do it. Now you can.
That's
See,
not
so
gonna
I
carry
said that to
over.
Lucci, and Lucci's like, I don't see what the big deal in is. I'm like, think about the people that are on Robinhood. And again, it's changed now because Robinhood has added a lot of features.
Yeah,
and
yeah.
at one point, they were doing an 8% match if you put your money in there. So it was like kind of worth it. But if you think about Robinhood, what's the connotation with them? They're retail noobs, right? That's what it is. That's what people
Yeah.
think of. I'm not saying they all are, but you put that in the hand of somebody and you say you could short sell stock. What could go wrong?
I mean, come on, bro. Listen, you're preaching to the choir. You're talking about a guy who came in to this game, and you had to prove that you had the bankroll and you were market savvy enough to buy a call. Okay, you had to be an accredited investor. You had to sign paperwork saying you know all the risk. Blah 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 blah. The compliance officer of the firm had to by the time you bought the call, the stock already moved. Okay, that's how I was in the game, introduced to options. That's how worried and concerned they were about retail getting into the option world. Now you're talking about, they can not only do that, they can short whatever they want. They just got to click buttons. I mean, listen, it ends in a bad way. I don't understand. I guess they got their asses covered lawsuit wise. See, back in the day with me, the compliance officer used to shit his pants because what would happen is that retail investor would blow himself up and then sue the firm saying he didn't know the risk. You understand? He didn't know what he was doing. So now I guess they figured out a way where they can cover their ass and it's all in the retailer's hands. Is that what's going on? That must be what's going on.
Yeah, I mean, at this point, do you even think people have risk management?
No, but I'm saying that's what compliance officers or brokerage firms, that was their job. That
right.
If somebody didn't understand the risk and what they were doing, you prevent them from doing it because they would blow themselves up and then they would sue the firm. You understand? No matter what, even if they knew the risk, they claimed they didn't know the risk and they would sue.
Yeah, that's why I'm surprised. That's why I'm surprised Robinhood was opening it up.
This is just a different era. I mean, you couldn't even on TV, like people would shy away from talking about stock picks just in case somebody bought it and lost money. They could sue the station and stuff like that. Now you got the president of the United States and his sons promoting cryptos right out in the open. This is just a different, a whole different world.
It's the best signal when he says buy stock. It is in your best interest.
By the way,
to buy stock.
Let's end this flow show on that note. The most important.
Okay.
We have to have both eyeballs 24/7 now on Trump's social media, his son's social media, Barron, that whole crew. No, because you
have to.
They're gonna. I mean, his son hasn't come out and say buy the dip in Bitcoin yet. That should worry you. He hasn't said anything. Does anybody know?
No. I'll be honest. Given today's action, I was pleasantly surprised that we got basically nothing from Trump.
Yeah, I know. And then you had they're gassing up the economy. They want a rate cut, and meanwhile you got Besant and all the other guys gassing up the economy. How are they going to get a rate cut like that?
Yeah, Besant came out today and said it's all eyes point to a Fed rate cut. Meanwhile, all of the Fed head speakers are being like, yeah, no. Even McGilligan. I mean, it's basically priced, or they're going to continue to price it in. I don't think there's a December cut.
This is on a short Bitcoin. This is as oversold as it's been in a while. No, without a doubt.
That's part of Lucci's thesis now because of what you said to him yesterday, where he's like, they're not even bidding Bitcoin.
It's crazy.
In a pro crypto office, like
the
pro crypto president, pro crypto everything. But then if you pull Zcash up, I bet you Zcash probably was just fine today.
Is there a ticker that I can pull up here or not?
It's ZEC, ZEC USD.
Oh, I'll pull it up. Like, oh, here it is, right?
That's market caps.
Oh, yeah, but same price, isn't it? Yeah, look, near highs.
Yeah. What is the price of ZEC?
What is that? 11 point. What is that?
It's $1 billion.
What do you mean billion
in market cap?
Oh, this is market cap.
Yeah. ZEC USD, and then just pick the one that says Coinbase. Go down 4. One more. There you go.
Oh, there it is. Yeah. Yeah. So what is this?
It went up today.
Unbelievable, man. These things.
And then yeah, Madden,
It's big
SIFE
volume,
is the
right?
treasury for it. CYPH is the treasury.
300,000. Oh, not as active as I thought it was. Oh, no, here's about 2.4 a day. Look at this move. Look at this. You gotta be kidding me.
Yeah, it's been around for forever. Just what I was saying to you yesterday. And the tech is like, there's so many other people that do it. That's why I was so surprised. It's ZEC, but
I never even heard of this ever.
It's a marketing thing. That's all it is. You gotta be with the right people to be able to market the coin, and then it skyrockets.
Yeah.
And then when you announce a treasury on top of it.
Well, there was a guy who, remember, came on the webinar yesterday, said, I'm not selling it. It can go to 10 trillion. I'm not selling it.
He called ZEC to 10,000.
10,000.
So we'll see.
There's so many of this shit I don't even know exists out there. It's craziness. Absolute craziness. But anyway, we'll keep our eyes peeled on the whole Trump La Familia over there. See if they give us any heads up. But other than that, you know, the usual guys. Those of you in the Steam Room, you guys know we look at it every day. We update it every night, so we know what to look for, look at. And for those of you on the sidelines over here, I'll talk to you guys next week and keep you guys abreast of it all.
Yep,
all right, Joe, as always, listen, don't be a stranger. You can pop up anytime you're around here, all right?
And I appreciate it. I enjoy being able to come in and
it's nice to
nerd out
talk
on
to
some
somebody
stuff.
else here. Usually, you know, otherwise I'm talking to myself or I got to talk on a 10-hour lag with people in the room. I ask a question and I'm on to the 5th question before I get the answer.
Yeah, I'll pop in more frequently, especially when the market's like this, and I feel like I have something to add of value.
Yeah,
but
interesting days, exactly.
I just want to point out, too, guys, that we are running our course sale. So if you want to learn how to trade flow from Jay or anything like that, head over to SteamRoomTrading.com. 30% off, 1 month free of the Steam Room.
Plug too while you're at it. Who's better than
Little
you?
plug of all the courses. I mean, especially on a day like today, if you had a bad day, probably a good time to invest. I am a product of the master course. I took it in 2017, so have at it. But Jay, it was a pleasure. Thank you.
Yeah, same here. Have a good night, Joe. Everybody have a good night. I'll see you mañana.